Really interesting session, and I've been delighted to be part of it. I'm going to very briefly share some thoughts on our outlook for the oil and gas market, and I think, given what's happened over the past week, I can't really start anywhere else but Ukraine. We believe that the events of the past week are going to reverberate in the global energy markets for months, potentially years to come. While some of the changes that we expect are going to unfold over years, I think there are some major uncertainties in the short term. And one of the greatest uncertainties that we see is how the escalation of the conflict in Ukraine is going to impact the flow of oil and gas from Russia to world markets. And although oil and gas are not explicitly targeted by the sanctions, we believe it's difficult to imagine that flows, especially of oil, are going to be unscathed in such an intense economic climate. So I'm going to share some thoughts very briefly on the short-term outlook for oil and gas, but also look a little bit further ahead at the impact that we see the energy transition having on the future of oil and gas. So in the short term, I think even before the geopolitical tensions ramped up over the past months, we saw a very significant increase in both the oil and gas price. Really, what our view is that the strength of the demand recovery following the pandemic, low point of the pandemic from a demand perspective in 2020, has been very strong. On the gas side, we've seen China play a big role in pulling LNG and piped gas towards China. On the oil side, what we've seen is that supply has been held back. So essentially, OPEC has wanted to see a strong demand recovery before putting more oil on the market. And this has contributed to high oil and gas prices. Another factor that's contributed to the high prices has been very low inventory levels, both for oil on the left and gas on the right. And I think the implication of this is that there's very little buffer. So if there's further disruption to supply or demand continues to surprise on the upside, there is increased potential for further price spikes and further volatility in prices. So what do we see as we look forward over the next 12 to 20 months? On both the oil and the gas side, we see structural deficits in the market. But in both cases, we see the potential for some softening in prices in the next 12 months. The relief on the gas side will come from a fall in demand as we move into the spring and summer. On the oil side, we believe that more supply could be brought online from the US and potentially Iran as well. But of course, the geopolitical risk is there, and that creates the potential for very significant volatility. In terms of where we see prices going, I think it's very difficult to be categorical about where the price is going right now due to the conflict in Ukraine. But our base case is the upper line here, the purple line, which is reflective of some disruptions to physical oil flows. When we think about the gas price, we believe that gas will be in the range, or LNG, European LNG will be in the range of $15 to $20 per MMBTU as we move into the summer. Looking a little bit further ahead, we think 2020 was really a pivot point for the energy transition. This chart just shows that although we've been talking about the energy transition for many years, fossil fuels have maintained a very solid market share over a long period of time. We think that's going to change. Since 2020, we've seen governments sign net zero commitments. We've seen concrete policy plans being put in place. We've seen money move away from fossil fuels towards clean technology, and we've seen technology costs fall. The energy transition is happening. The big uncertainty is how quickly. We use a scenario approach to look at the future of oil and gas demand. Here I'm showing oil on the left, gas on the right in 3 scenarios. Inflections is our base case. It's a scenario where the energy transition happens slowly, and you can see oil and gas demand is resilient in that scenario. Green rules is a faster energy transition case. It's not a net zero case, but it's a scenario that we think is feasible. As you can see, in that scenario, you have significant demand destruction for both oil and gas. So I will conclude there and just leave you with 3 thoughts. So firstly, we see continued tightness in oil and gas markets, which will be supportive of high prices. Secondly, there's going to be extreme volatility in the market whilst the conflict in Ukraine continues. And thirdly, the energy transition is happening, and it's going to create headwinds for oil and gas. But as my colleague from Sonatrach said, we also believe that oil and gas have an important role to play in the decades to come. Thank you very much. I'll leave it there.